Hello and welcome back to another episode of Finance Agents Live. This is episode number 103, and today you got Tim Mc and Trey Sublet here. How y'all doing today? How you doing, Trey? I threw in a y'all for you.
G-O-D-Z right here.
Trey is from Texas, so
I can say y'all.
We try to get him to drop some y'alls around the office. Today, one question that we get a lot as finance agents and people that manage a huge network of other brokers, people that are interested in becoming finance agents often ask, how the heck can banks and lenders pay these huge commissions that are available on financing that we can help acquire, and why doesn't it even make sense for them to do so? Why don't they just pay way less? So today we're going to answer that question for you very specifically. We're going to show you exactly how much money banks are wasting every day with the branches that they manage in order to bring in business, and how much better it is for them financially in order to work with finance agents. So we're not just going to guess, we're putting it to actual numbers. All right, Trey, you excited to do this one?
Yeah, so definitely. This is a very important topic because some of the questions you get every now and then, like why should I work with finance agents? So if you're trying to help someone get capital for their business, they ask, why should I work with you? Why not go to my local bank? So this kind of falls in line with why they should.
Right, all right, so good. Let's get into it. First of all, let's start with just a basic truth. Banks and lenders love money. And I don't mean that in a way like the money is the root of all evil, but if you think about it, if you're selling cars, you probably like cars. If you're a landscape architect, I love that term by the way, landscape architect, you probably better love you some landscapes.
Bankers love bread.
Bankers, this is their whole business, is taking money from you at like almost no return, lending it out to people at a lot of money and making the spread, and that's their entire business, is managing that money. So banks love money, right? So banks and lenders are not going to do things with money that isn't smart. Yet they're all the time paying these huge commissions to different independent funding brokers and agents like us or like the people that we work with. You got to be wondering, why the heck do they do that? And that brings us to the second topic. So banks love money. Now the second truth is banks waste money like crazy, and we're going to show you exactly a very specific example of how they do that. And it's all going to lead to teaching you why banks love finance agents. So, Trey, we did some math. I didn't run over it with you before the show, but we did some math. How much do you think a bank spends running a single branch on a monthly basis?
I'm going to say $118,000 a month.
Oh
no.
Where did that number from?
I would say there's a lot of different variables. We're given projections here, but it ranges from employees, staff, marketing, lease, training. There's a ton of costs and expenses, and so I couldn't imagine.
That's sort of the basics, right? If a bank wants to grow, generally they can go open more branches. When they open more branches, people will drive in and they get new opportunities. They, of course, make money when you save your money at the bank, but the only way they make the money you're saving is if they lend it out. So they need to bring money in and make loans out of the bank, and the one way for them to get more loans is to have more branches. But that can be really expensive. How expensive, you say? Well, we're going to tell you the exact numbers, right? So there's a lot of costs that go into running the bank, but today we're just going to talk about three. What are the three types of costs that we're going to break down for the people watching the show?
And this is just for one branch, right? Right, Tim?
One single branch.
First and foremost, rent.
Okay.
You got to rent. You got to have a location. Here in Newport Beach, a little more exclusive compared to
a little more expensive here,
other places in the country. But yeah, so location's important. Payroll. Payroll is probably one of the biggest liabilities of any business. Any small business or larger business. So payroll for your staff. Then marketing. There's tons of ways of marketing for banks. I guess it's billboards, radio ads, commercials, TV, sponsoring events throughout the local area. So these are all three simple ways of how they're spending money and wasting money.
Right, so those are the topics that we're going to cover today. This doesn't get into legal. I mean, how much money does a bank spend on legal and attorneys and all the other stuff? We're just going to talk about those three topics and put it into real numbers, right? So in order to make them real numbers, I went and I found a real building that has a bank as a tenant that is available for rent right now, right here in Irvine, right next to us. I just found the first one I came across.
Landscaping expense right there.
They got landscape, right? So, but the bank is renting the space, and I totally understand that Irvine is more expensive than the rest of the country, but you're going to find that the rent is actually not that big of a portion of their monthly expenses. But What is the monthly expense on this particular location that you're looking at here, Trey?
Oh my gosh, you make me do math.
Okay,
right here.
annual expense.
Annual expense
Per square foot.
Per square foot. I mean,
it says it right there. Just read it.
$39 per square foot.
$39 a square foot. You may be thinking, well, how much space does a bank branch have? You know, it's interesting, when I was looking at places for our company one time, I looked at a place that had been vacated by a bank, and you're going to find that there's a lot of floor plan. And in a branch, there's a lot of space used up that you don't even know about, because they have backroom stuff. They have, their rent is more expensive because sometimes they have safes or safe rooms at least. And I didn't really get into that, but I guesstimated that a branch would have about 5,000 square feet. You got a lot of open space, and then there's offices that people don't see. And I think that's about a standard. If you think that I'm crazy, too high or too low, let me know. But I know there's branches with way more than 5,000 square feet.
So right around $16,250.
Trey's cheating. He's looking at the next slide, by the way, in case you're wondering where he's coming up with these numbers. So if you have 5,000 square feet at $39 per square foot per year, that comes out to $16,250 per month. Boom. So there it is. That's the first cost. Now, a lot of these banks, they get into 20-year leases. And that's why you see their name on the top of the building, or they're on the ground floor. They're in the most expensive locations because they want to be in the retail spot right at the bottom, or they're out, some of these places in Irvine, it's $4 a square foot or more. This one isn't quite that. Either way, $16,250 a month. Now, how many loans do you think you need to sell in order to make that much money just to cover the rent and for them to break even?
Well, it depends upon the product, right? If they're doing commercial real estate, business credit cards, so probably a good, 6, 7,
6 or
8.
Yeah. Okay. Well, it depends on how you look. I have a little example we're going to give later for a bank that has $100 million lent out at one time, which is a lot of money, way more than you expect for one little branch. But anyway, right now, rent, $16,250 per month is what a bank is going to spend to have one branch. And that doesn't cover build-out costs, there's construction costs, you got to buy all the furniture. We're just talking about their monthly costs just to have the place open every day. We're not talking about electricity, any of that stuff.
And a bank can't sublease, right, Tim? A lot of people sublease to save money. This is not something that a bank's going to do.
No, a bank's going to get in a long-term location. Just the build-out itself is going to make it not make sense to have a short-term lease somewhere. All right, so that is rent. Let's go on to the next part. Payroll. All right, now when you go into a branch, you're going to see a lot of employees, and those are just the ones that are there right now. For retail, you're going to have different shifts, and I a little bit guesstimated. I actually walked through a couple branches and sort of counted how many people were there, and I'm pretty sure there's going to be more than this, but let's just say a normal 5,000 square foot branch, got a lot of floor space, you got 10 employees there. So among employees, you got a couple VPs, you got 3 loan officers, you got 5 tellers. Tellers are coming in and out. There might really be 10 tellers, but I figured full-time, you got about 5. If you have 10 tellers half-time, it comes out to be about 5 full-time. A couple branch managers, because again, not everybody's going to be there all day long.
I'm going to throw in some security guards too.
Security guards. Okay, yeah. I didn't even think about that. So there's more than this, and I've just put this out. So assume it's probably going to be more than that. You got the guy that cleans, but maybe the building pays for that. So I went on to Google and I kind of came up with national standard salaries. So unlike the rent, which is maybe a little high because we're here, these are national standards. So a bank vice president or a branch vice president, $7,000 a month. You got a couple of those. Got a few loan officers make a little over $5,000 a month each. The tellers at $2,000 a month. By the way, that's I think maybe below minimum wage here in California. So that seemed a little low, but whatever. I just used the numbers that Google told me, because Google knows everything, right? And then a couple branch managers at $7,000 a month. Total that all up, that's $53,750 per month just for payroll. Then, on top of that, that's not really the only cost, because you got to add in benefits and taxes. If you pay $53,000 in taxes, it costs you about $63,000 to pay the $53,000. You got to pay about 25% more just to cover payroll taxes. So a general rule of thumb is to take your payroll and times it by 1.5, and that covers all the benefits and everything. So you're looking at about $80,000 a month in payroll, plus more if you have security guards, just for that one branch. And now you're starting to talk about some real money. And what about marketing? What do you think is a reasonable marketing budget And I just guessed on this one. So what do you think, Trey? Because you talked about sponsoring things.
Right. I think one of the biggest things is that they're sponsoring events in local area.
Lots of them, right?
Lots of them. They're going out and building relationships, buying lunches, buying dinners, and so easily 20,000 without a doubt. So one lunching could be $2,000, $3,000, $4,000.
Luncheon would be two. Oh, right, because they're doing it because they're putting it on for a lot of people. Yeah, their banks are doing events all the time. They have local marketing. I guesstimated $20,000. Frankly, I don't really know. It could be $10,000 or it could be $50,000, depending on the branch or how many branches are in the area. Maybe there's a bunch of branches. But you get the idea. I think $20,000 a month is pretty reasonable. I tried to look up bank stats for marketing, and banks are spending billions of dollars on marketing. They didn't break it down to the branch level. So this is my best guess. Well, let's put it all together. We got $16,000 in rent, $80,000 in payroll, $20,000 in marketing. Comes to a grand combined total of $106. How'd you guess that,
I don't know.
Trey?
I'm just
$116,000, $875 based on these guesstimations of expense just to run a single bank branch. All right, so I'm pretty sure we've fairly established that running a branch costs a lot of money. You're looking about $1.3 million a year in just costs. So the income from that branch needs to be way more than that, right? Because if they generated in gross revenue $116,000 a month, they'd still have the costs of the financing, right? They'd have costs of all the legal and the other things, so they'd still be losing money. So they need to be bringing in at least 1.5 times that or more from the activities of that one branch in order for that to make sense. If a bank wants to grow, do you think they're going to quickly jump into opening a new branch with a 20-year lease and all the payroll and electricity and internet and security and all that? Are they going to jump right into that decision? Is that an easy choice for them to do?
Heck no.
No, they're going to take their time.
They're going to take their time. They're going to expand out. They're going to hit certain local markets. And so I believe the 116 is the tip of the iceberg. It's probably twice as much.
I think it could easily be more than that. A lot of branches are bigger than the one we estimated, and plus all the build-out costs. So it's really expensive to grow by branches. How else are they going to bring in more business if it's not by opening more local branches, Trey?
By forming relationships with companies like finance agents.
People like us.
Right.
And not just us, obviously independent funding brokers all over.
Correct.
But we got a lot that work with us, and now you know why it makes sense for them to do business through these agents. They could have 100 agents in an area, and what would their monthly payroll be?
No payroll, not having to market. It's an absolute zero cost besides the person who's handling that relationship.
Right. Okay, so again, now we're up to $116,000. How much business, how many loans do you think they need to be doing in order for that to make sense? Just doing some quick math, because let's say they're bringing in a certain amount of money. I won't get into the details, but banks actually take your money and they lend it out multiple times, and how they do that is a little bit confusing. But let's say a bank has all told $100 million in financing that's out and they're earning interest on it. Now, they earn interest and they have to pay the interest to you, but obviously that's really low. So let's just say they're earning 12% interest by lending your money out multiple times. $100 million, they're bringing in about $100,000 a month in interest. That's not enough.
Right.
That branch needs to actually be putting out more than $100 million in order to, and they're still not even covering that cost. That just kind of boggles the mind. Banks obviously do a ton of business, but it's better for them to grow through things that don't cost a lot of money. So the alternative would be finance agents. So let's kind of break down the numbers on what that looks like. All right, so a full branch cost we established is $116,000. Let's say they're going to now grow their business by adding more agents instead of adding more land space. So let's say you take that expense and cut the salary in half, because one person at a bank could probably handle 100 different finance agents, but let's just say half. That cost goes from $116,000 to $40,000. I think that's fairly, it probably could be way less than that because you can handle a lot of finance agents. Based on those numbers, $116,000 minus 40, that's $76,000 in commissions they could pay out in a month with the same cost breakdown. So they're making just as much money by paying out $76,000 in commissions as to having another branch. And if you break up that money into the smallest unit possible, let's say agents brought in 40 deals, and honestly I think a bank might only be doing 5 to 10 loans in a month, literally, right? But let's say they're bringing in 40 deals by working with finance agents. That's over $1,900 per deal they could be paying in commissions. Obviously, the commissions can be more than that. Some deals you can earn a $10,000 commission on one deal. And it still makes sense for the branch, because if a branch brings in no loans in a month, how much do they have to spend?
$116,000.
$116,000. If finance agents bring in no loans for a month, how much do they have to spend for the finance agents?
Zero.
For the marketing.
Right.
For the payroll. They could pay for none of that. So good months, bad months, they're way safer using independent finance agents who pay their own marketing costs, hoping to pay it back through the loans, than to use their own marketing.
So banks are motivated to pay out more commissions, right?
They love it.
They want to pay out commissions because overall they're saving money.
They love making money by saving money.
Yeah,
and we love making money by making money too, working with them. And that is why it makes sense for banks to use this model. And it's kind of like, finance agents, it's kind of like the Uber of funding. You want to go drive for Uber, you can go hop in the car, make money, drive around, and then walk away whenever you want. You got the independence of driving around, but you're just effectively a taxi driver. If you're a finance agent, you have the same independence and freedom of, say, driving for Uber, but now you have the income of a banker, which to me is way better. This is basically the future of financing. I think you're going to see fewer and fewer branches and more independent reps who, the good ones, are going to make way more money than working at a bank because they get much bigger commissions than the bankers because they don't have that safety net of a salary every month. So if you're trying to decide, should I do this? I hear these commissions, they sound crazy, they must not be real. Believe me, they're real. The banks love it. They'd much rather pay even $20,000 to you than bring on an employee with $100,000 or more of annual payroll, just for the payroll itself for that one person, not even counting paying for their computers, paying for the insurance, paying for all the training, or paying for the trainers to train them, all that sort of stuff. All right, that's it. So today we talked about why it makes sense for the banks to work with finance agents. Next week, we're going to come back and talk about the costs that are in order to go start your own funding company, basically working as an independent funding broker or working with us as finance agents. What are the costs in order to go out and make it, say, your full-time gig, starting a full-blown funding company, working with these very lenders that we are talking about.
So the next time a client asks you, why should I work with you instead of a bank, you say, well, I can help save banks money. They want to work with me.
Yeah, the banks love working with us. So they're happy to take your business, and you can work with banks that don't even have branches in your area, banks you never would have heard of. They might have much cheaper financing or better financing that something can get locally, and the reason they're able to get to it is they're working through an independent finance agent that can bring in the best deals from lenders all over the country instead of just the local ones. So a lot of benefits to working with you over working with the local lenders.
Perfect.
All right, thanks everybody for coming on. Subscribe to the show if you haven't already. Look forward to doing a lot of deals together.
Is that
See you
gold
next week.
or chocolate gold? Or is that candy?
I think it's chocolate.
Chocolate, okay.
That you can spend.
Beautiful.